What's going on, everybody? Well, this is a little disappointing. I cannot get into my Topstep account. Let's go here. Welcome back. Yeah, thank you. Trying to get into my Topstep account. Oh, there we go. Hey, now we're in. Now we're in the account. Okay. Thank you very much. Launch Topstep X. All right, there we are. Let's clear that. Here's the drop base rally. All right, looks like it's coming back into that area. Let's box that out. Let's box out this whole area here. Oh, come on, my little. There we go. Right. So it gave it to us in the middle of the night. Gave it to us in the middle of the night. And I was going to have that ready. I was going to have that ready. 9:30 open. Who knows? Maybe we'll come back in here. Sunday opening range. Let's get rid of this blue line. Okay, and we've got this down here as well. Extend right. Thank you. Extend to the right. That's what we want. Okay, so what to do here, right? What to do here? We could set this up again, take a small chance on this area here. Where are we at? Where are we at? Big picture. Kind of cycling down here, big picture, right? We've got the uptrend. We've got a recalculation of the 1 hour chart, hitting that previous month's high right here, previous month's high. We haven't quite broken above positive 100, right? We just kind of are touching it. Kind of looks like a sideways movement right now, right? Kind of looks sideways, and that's what's a little frustrating. Little frustrating. TradingView is doing this weird thing now. You can't move the chart. It brings up this stupid graph here. I don't even know what it is. A little frustrating. You have to use these now. Now you got to use, they're making me use this thing. That takes forever. This is what I'm looking at here. This weird looking candle here, but this is kind of the consolidation part. Here's where price left that consolidation, rally base rally right in there. Let's be a little more exact and see what it looks like. I guess we can say that rally base rally, right? Rally base rally. 3 basing candles, and that kind of does it. That kind of encompasses all of that. And then within that, you've got this drop base gap up right here. You can only trade what you see. It is what it is. It is what it is. All right, so does look like it's pulling back into that previous month's high right there. And that's going to be at the bottom of the opening range. And now we're getting this gigantic candle that's going to form here and just rip through everything to the upside. Dang it. This happened at, what, 4:45? Yeah, it's going to take off without us. I mean, that area there. That area there. A little disturbed by that. A little disturbed, right? I'm a little perturbed by that. I have that ready. I don't think it's going to come back. I don't think it's going to come back to there. No, it might do a little retest of that area. Let's see, that previous month, that's all the way up here. That's all the way up here. And structure, right? Previous month's high is right there. It kind of likes that area. And all the structure is down here. Maybe it will give us a retest. Maybe it'll give us a retest of that area. We are down here. Bearish candle forming here. Order filled. Oh, wow. Okay, let's start managing this. It's right at 500. Build the gap. Opening range is all the way up here. We need a breakout of that opening range. Let's take a look here on the full contract here. That's what we want. That's going to be a very wide opening range, but if we can survive that, this is a retest of that gap fill is what it is. Let's see if we can, it's a very wide opening range. That's going to be very wide. It's either going to work or it's not going to work. That is definitely, to me, it looks like the right spot, as far as a demand zone goes, that's the gap fill. We got this, there was a ton of orders here, opened up on Sunday. Here's the Sunday opening range. This is obviously today's opening range. That was my thought process there. And we need to see this thing start to work. We need to see this start to work. And it's working, right? It's working as of right now. Top of the hour, we'll start to see top of the hour. We'll start to see this. So CCI crossed just kind of hit positive 100 and then came back down to the zero line. So we've got a little bit of sideways action here. Now we're into a bullish candle. Thank God. And let's see if we can maintain that. Just reading price action here. If it reaches, we could back up here. We could have a pretty big day if we can survive this here. Got to wait for the opening range to actually complete. We got to play very aggressively. We're in, it's a proper risk, right? If it works, it'll be great. If it doesn't work, it will eat into our 830 profit. But that's an acceptable risk. It's an acceptable risk, and we don't know what's going to happen. And when you don't know what's going to happen, you have to accept the risk. And if it doesn't work out, it sucks, But if it does work out, then hey, you're a genius, Whoops. So far, a bearish candle is forming the opening range, but we're still inside of we're still inside of this here. 5 minutes left on the opening range. Looks like it could go either way as of right now. We need to see that candle break above the 50 simple moving average there and then continue the move. Not sure why this would go down today. We do have the uptrend on the 1 hour, right? We recalculated. Here's that fourth wave, and we wanted to recalculate on the hourly. We wanted the hourly to recalculate so that it can continue the move up here. See, we're early in the trend on the 3-hour chart. We're early in the trend on the 3-hour chart with the proper amount of momentum. Momentum's with us on the 3-hour in an uptrend. This little pullback and sideways movement is what's forming our cycle right now. That's what's forming our cycle right now. And the same thing on the 1 hour, right? But it is still an uptrend. It's still an uptrend. Little trend cloud signals firing off, right? And then we've got this down here that happened on Sunday. Oh, I hate that. I gotta tell somebody about that at TradingView. That's very annoying. You guys getting that as well? Double click onto the chart, and you get this chart. It's completely useless to me. 15-minute. Come on. 15-minute trend cloud is trying to choose a direction, and it's wow, very neutral there. So hopefully we can survive this. 15 minutes. So this whole thing is from here to here is the opening range. At this point, what I can do is this and reduce my risk, being that this is going to be the opening range. Okay, so that is, oh my goodness, I can hardly see that. 1 more minute left. Open this up. Sunday's opening range. That's going to be the opening range there. 11 seconds, 10. So mitigated risk quite well on this here. Now we've got to get that. Move now. Let's drop to the 5. There's the opening range right there. Inside, I'm going to keep it right there inside of this zone. Right, the gap fill, inside of the gap fill. Maybe we can mitigate risk. Oh, don't like the look of that, but there's nothing I can do about that. Nothing I can do about that. Oh, let me put my lines back on there. Come on, 15-minute chart, 5-minute chart. Well, there's the opening range. It's very wide. We're in at a very good position. Because we got in early on that gap fill, and now we have to, we've got to survive this now. It is what it is. We don't know what's going to happen. Let's see if we can survive it. So we've got a $200 risk. Here's the gap fill. We're right below that gap fill. which is just below the opening range. I think this is as good as it's going to get on this type of a thing here. This is as good as it's going to get, guys. That is a great position to be in for a breakout to the upside. We've mitigated the risk. We're at the bottom of the opening range. It is what it is. We have to survive it. Okay. This is a very wide opening range. If it breaks out to the upside, you know, and you try to get in here, you're going to be all the way down here is going to be your stop loss. I would probably pass on that unless you have already gotten in down in here. Or if you get in here, you would have to use the candles that were inside of the opening range. Here we go. Here we go. You'd have to use those candles inside the opening range, for the stop loss. Look at how wide that opening range is. Very wide. Again, we're inside of, here's Sunday's opening range. Comes down, hits demand, and starts to catch. We've got to catch that momentum and trend working together to break out of this. Again, this is Sunday's opening range right here. If we can carry those contracts, where's 1500? We're not allowed more than 1500. So let's go to, this is the top of the opening range here. That's a good target. 1500, right around. Oh, look at that, right on the dot there. Today's opening range, there. 5-minute candle, come on. 5-minute candle has to break above, close above that range. And I'm going to take some targets right here. Why don't we, what do we sell to? Sure, 2 or 3. Let's sell 2. Looking good at this point. I'm going to get risk-free. There's 5-minute. Let's start breaking out. I think that's a good target. It's a good structured target right there. Where is ADR? There's Sunday's opening range. Maybe is that another target? Possibly, right? Good gravy. Come on. We've got some structure up here as well. Previous day's high. Previous day's close. Sunday. Previous day's high. That's right around, well, what is that? Oh, that's all the way up here. That's all the way up here. Now it's all about, you see, do I really want to retest all the way down here? I don't, not at this point. Do I want to retest shallow? If this breaks out, closes above the opening range and makes a shallow retest into this area, do I want to accept that? Yes. Mitigating risk is so important. So this is very advanced, guys. If you can see a couple of moves ahead, you've got to take that risk. This is mitigated beautifully here. Is it going to work? I don't know. I don't know if it's going to work. It's working right now, but I don't know if this is going to work. So hopefully it does. We need to see that breakout to the upside. Okay, it's just kind of retesting, broke out a little bit, retesting the opening range there, and hopefully we can survive this. And there's no whipsaw. 300 smackers is that is what we would be leaving on the table here. But with this price action, really looks like it's moving towards the top of that opening range to break out. We need that 5-minute candle to close. Let's take a look at the 1-hour chart here. What is it looking like? Still cycling down. That's what's given us some problems, right? Slightly peaking below the 0 line there. But, look, this is the sideways action that's kind of happening today, So, it's like, okay, so what do we do? Do we wait for a better setup and just take the money on the table right now, right? And just wait for a better setup with all this sideways action? Or, do we let it play out and we'll catch them again another day and we only make $25? Like that was us the other day, right, Kazi? On what day was that? I think it was Friday. It might have been Friday. We were in the trade for like 2 hours and we only made like $3 or something. It was 4th of July. That was 4th of July. Yeah. 4th of July. Yes. What are you gonna do? 350. Oh man. So pulling back. Do I pull the trigger on this? Take my my $400 here with all of this, because it's definitely looking sideways. We don't know what's going to happen. Oh, it looks like it's pulling back. Oh, it looks like it's going up. Yeah, we don't know. Look, we don't know. We're in a very good position. We don't want to give that position up. If it pulls back and I only make $25, then that's it for me. I'll look for a stronger. We can only trade what we see, and we can only trade what's given to us at this moment in time. That's the beauty of sticking with an objective strategy. It's always the where. Where is this going? Where is the entry? And the timing, right? The when, the where and the when. And if you could eliminate those two aspects, those two variables, if you can eliminate those two variables, where and when, and make it very objective and structured, you've got yourself a great trading strategy, which is why the opening range works so well, because where are we getting into the trade? Well, at the breakout, right? In this case, we were able to see a demand zone and we got in on a gap fill. Okay. So there's the where. When? Well, at 9:30. The 9:30 open, 5, opening range is formed. So the where and the when have been eliminated from the equation. It's fixed. Where? Breakout of the opening range. When? 9:4. The where and the when have been eliminated, and now you're dealing with structure and the other variables that you put together there. But another retest of this area is going to be quite whipsaw. I'm just not going to be a part of it. What's it looking like? Where price is nice. Let's see this let's see this fire off. We're starting to peak above that zero line, but very, very, very sideways here. Dang it. Very sideways. So let's see if we can survive it. Sunday opening range right here. That looks terrible. Really want the previous month's high to hold. I really don't want to go below that. We want it to bounce off the previous month's high and give us something today. We want it to give us something today. Not good. That's not good. See, step by step, we're seeing what this is. This could reverse at any moment. This could reverse at any moment here, but it is coming back down. Order filled. I'm gonna get out. Took $60 on that. I don't like it. All right, let's get out of this. $50 is better than $25. Plowing through here. Little bit too much sideways nonsense for me. Don't like the looks of that. And it might retest that gap fill and go up, and now it will work, but don't like it. I don't have to be a part of that. I don't have to be a part of that. So small win is better than full boat loser. And with all this sideways action, broke out to the upside and decided to come all the way back and retest down here. I just don't have it. I don't have it. Don't have it in me. I'd rather make a small gain and look for a better condition. You can only take what the market gives you. You can only take what the market gives you. So it didn't quite break out, right? But it came back, retested, right? So retested here, retested here. Nah, I don't like it. Don't like it. We like it when we've got strong conditions to the upside. That 5-minute candle closes above the opening range on a nice bullish bonus candle, but with the way this looks to me, this sideways, this is very difficult to trade, right? Because you can see, oh, now it's working out. Maybe I should have gotten in. We don't like those. We just don't like those days. You've got to be able to say, this is looking sideways. Look how squished the trend cloud is. All the visuals you're given, your trend cloud. Squishy looking, constricted trend cloud on the 1 hour, which is our trending time frame. We want that to be looking strong. We don't want that to be looking constricted, right? A lot of sideways movement here. It went all the way up to here. We had $500, and so you're trying to rack your brains like, oh, why didn't I take the 500? Well, because it was working in your favor, and it hadn't even broken and closed above the opening range. And now this very deep retest, I think, look, it's okay. It's okay for it not to work out. It's okay for it not to work out. We love it when it works out, and we have plenty of days when it does work out. We have plenty of days when it does work out. A little too much sideways goings on right now. Goings on, a little too much sideways price action going on here. And, yeah, hey, it hit that gap fill again. That's what we wanted. But then it gets back up here. Now we're price action is, we're below the 1 hour. So now we have two conditions that are not met, right? We've got this very wide opening range, a little bit of sideways movement. Price is below the 50 on the 1 hour. CCI is below the zero line. This is not our setup. This is not our setup. Meh. We squeezed $50 out of it. Well, I did. I squeezed $50 out. I squeezed 80. What can we do at 53.80? Maybe go to a fancy restaurant. I don't know. Go get a steak. Picture, that would have been picture perfect, right? We would have been so happy. Pulls back, mitigated the risk on the very wide opening range. We got in at this beautiful area here. And, we survived it. Definitely survived it. And if it works out now, is that going to stink? Yeah, it's going to stink. But you can only trade what you see, right? To me, I'm looking at this, I'm like, this is a lot of sideways movement, a very deep retest, back and forth. I don't like that. Those conditions that we optimized for this version of the opening range is for a reason. It's for a reason. And we went through a whole month back and forth, and did a ton of work refining these conditions. But guys, you just wait for it to happen again. It's not like we missed the entire boat, right? Eight, right? We got 886 in the bank on day 3. Okay, day 3, 0 losses on day 3, and 3 wins. Small wins, right? Great first day, right? 800 and then 2 want trades. Want didn't work. Want didn't work. 2 want trades. Let's see. It is 10:00. We're right smack dab in the middle of this opening range here. 5-minute chart has not chosen a direction. Sometimes that's how it goes. Let's go back to trading view. Very sideways movement. So we're trading. Actually, now we're below Sunday's opening range. That's the dotted line. Here's today's opening range, and 1 hour CCI is heading back below negative 100, cycling down. 3-hour chart now, CCI breaking below the zero line. This is definitely not the setup we look for, right? That I'm very happy about. I guess that's how you have to look at it. This is not our setup, right? We took a chance and it worked on this demand zone because we saw all this structure. This is where buyers seem to be coming in. We had this amazing gap up on Sunday. We boxed that Sunday gap up and said, oh, look at this. If price breaks below the 50 on the 1 hour, it will recalculate inside of this demand zone, and then it will start taking off. Well, we were partially correct, right? We were partially correct. And I did post that into the chat, that pre-market analysis, and my head is looking really weird in that picture. I had the window open and the green screen made me look a little weird. So that's why there's no picture today. I don't want to be looking weird in front of you guys. So yeah, I think that was as good as it was going to get. Man, it had $500, had $500 on the table there. But you see, we just didn't know. We did not know what was going to happen. Now, technically, if I stayed in this and I risked the actual 200, we'd still be in, but maybe we would be in a lot of distress. This would be very stressful instead of doing break even, right? This would be very stressful. But you know what? I think eliminating playing defensively. I don't think you can lose playing defensively. You may not win big, but I think that could save your month. I think that could save your month and add to your P&L. by playing very defensively. So we played defensively. It pulled back. I saw it ripping to the downside, and I jumped out. There are so many times when we get in front of this thing pre-market, and we're like, "Oh my God, this thing is so going to break out to the upside." 3-hour chart CCI above 100. 1 hour CCI above 200, cycling up, bullish candle formation on the opening range. Guys, that's what you go for. That's when you give it a little bit of latitude. That's when you give it, you know, take the full contract on that. Take the full contract on that. Something like this, away, right? You're going to take, can you imagine taking one full contract on the breakout of this wide opening range with CCI and cycle down and a squished looking trend class? No way, right? I think you guys are see that. I think your eyes are conditioned to that now. But yeah, no way. 1014. Oh my God, this thing. 1014, and we're still in the middle of this thing. There you go, 1 hour. See how it really gives you a play-by-play. 1 hour is like creeping towards that negative 100, creeping towards negative 100. We love to see price pull back into a demand zone when that 1 hour CCI breaks above positive 100 and then sort of pulls back shallow as it's pulling back into the demand zone, right? That's what we like to see. But it's got to break above that positive 100 first. And then on that first pullback into demand, that's when you have the best chance. I'm very curious to see what this thing does. There's the gap fill. It definitely filled the gap right here. And look what it did. It went whoosh. We were feeling really good. We had 5 contracts maxed out on our leverage. The risk was good. Our stop loss was right here. Was right there below. We were protected by this gap fill. We were protected by the opening range, but sideways movement throws a huge monkey wrench into your momentum-based strategy. And there's no way of telling what's going to happen. No way of telling. And here we go again. Now it's going to start, does it start to go back to the upside? Hits this middle area here and then drops back to, we don't know. We don't have an edge. We don't have an edge. All we have is a demand zone that's been hit 4 times. Yikes. I'd rather put my money down on something else. What is the use of this chart? What is the use of this? Thank you very much. There must be some way to turn that off. There's got to be a way to turn that off. Well, I will be waiting for tomorrow's opening range to go at it again, but we'll watch this until 10:30 and we'll see what the heck it does. We're learning, right? We definitely learned about the Sunday opening range and how useful that is. If we didn't see this on Sunday, we wouldn't have seen the gap, right? We wouldn't have said, hey, gap fill, perhaps gap fill, right? It really likes to go into this area and then start ripping to the upside. Well, heck, I don't like the fact that we're below the previous month's high either. But it definitely is reacting off this gap fill. It's just that's not our strategy, right? That's something that could take place pre-market or right at the open. That's when we got in and we said, hey, we could really mitigate risk on this thing if we get in on that gap fill, and then hopefully it takes off. And it started to do that. It did, right? We were partially correct. It came in, hit our entry. Didn't stop us out. That's the gap fill, drop base, gap up rally. Very powerful. It came down, it gave it to us, and went all the way up here and started breaking out of the opening range. We were 100% correct the whole time. At about $500 from here to here was about $500, and then it just crashed all the way back down. Whoa, no way. No, thank you. No, thank you. In hindsight, this from here to here, that was, wow. I mean, oh my goodness. Now that I think about it, geez Louise, is that 4-1? Where's my little line? Get rid of the magnet. We were right here, right? We got in on that gap fill. I still don't know how to use that that other tool. Yeah, I mean, there's 1 to 1, 2 to 1. It's like 3.5 to 1. Yikes, Christopher. So in hindsight, so now, I'm thinking, okay, well, if that happens again, perhaps that should have been my first target. Maybe that's you take off. That should have been my first target, perhaps. The take off two contracts at the top of the range. But surely, if we get all the way up here, it's going to break out to the upside. Why take a target there? Which is why I said right there. So, that decision. Next time you get into that type of position, you'll take the target here, or you'll take it at a 2 to 1, and then it'll go here or break out and never stop. And you're like, oh, why did I take the target there? So, it kind of, that's what makes this part, the risk management part, so difficult, is because that is variable. There are thousands and millions. There are millions of different variables that could take place. So you have to have, data on this stuff. And usually 2 to 1 is, pretty high. 2 to 1 really gives us probably the highest numbers, as far as data goes on what gets hit the most. And with 5 contracts, you can afford to do a 2 to 1, pull off 2 contracts at a 2 to 1, and then, you see what happens. I think we would have made the same amount of money. Pull it off at a 2 to 1, pulls back, we saved on commission. We saved on commission fees by exiting the entire trade. So there you go. That's how I justify it. Well, we're above the previous month's high. We're above the previous month's high now, and we are at the bottom of the Sunday's opening range. There's the top, there's the bottom. Today's opening range is kind of in between both. Perhaps that's why a lot of people are starting to buy in this area here. They did not want a retest all the way down here. That's for damn sure. Is what it is. Gave me $50 today, and that was it. Now I'm curious about the Topstep copy trader. They're going to allow us 10 accounts on the copy trader. But if I close out, I'm assuming that it's going to copy everything, even the risk management, not just the entry, but the risk management part. I have to see how that works. As he took $38. Nice. We could, it will do everything you do on the one account. All right. That's it, man. If we're doing, $6,000 to $8,000 in the competition, there's no reason why we can't do 6,000 to 8,000 in Topstep. There's no reason. It's even the same damn platform. There's no reason why. If we treat this like the competition, that's why it's so important to do the competition across 10 accounts. That's $60,000 to $80,000 a month. Now, that sounds good to me, and that's what we're going to do. We're going to do that. It is fancy breakfast money for sure. You can get a nice bagel and some fancy cream cheese, have yourself a nice breakfast, maybe a juice. Oh, now this, oh my goodness. Now this is a very bullish candle that's forming. This is the 15-minute chart. That's a very bullish candle. Let's drop to the 5. 3 bullish candles. Okay, see the difference here? I mean, this is pretty bullish, but it just, golly, it just came back on us. Of course, right? But we didn't know what was going to happen. I stand by my decision. Don't know what's going to happen. 5-minute chart, a lot of sideways movement here, but this was definitely the place. Starting to hook up on percent K on the 1 hour, but still, and now it looks good, right? At least the price action that I'm watching on the 5-minute chart looks good, but the conditions are not quite there yet, right? We would need to have a breakout and then some sort of a retest in order for those conditions to really be where we want them to be. We want our conditions to be spectacular. Pre-market, right? We're looking at this thing pre-market, like we're right here. It's 9:15 in the morning. We're looking at this and we're seeing uptrend 3-hour, uptrend 1 hour, CCI above positive 100, CCI 1 hour above positive 200 or also above positive, wherever it's up here. And we're like, oh, yeah, baby, come on. We want it to look spectacular to take a trade. And if it doesn't look spectacular, anything less than spectacular, you better be on the micros and you better play very defensively. That is the main point of today, right? The main point of today's lesson. Anything less than spectacular, you better be on the micro and you better be playing very defensively. And that's what we did today. Made $50. Ozzy made 38.50, something like that. He's going to get a bagel with fancy cream cheese and a nice pineapple juice, but organic. All organic, very expensive. Only the best. Only the best. And there it is, right? Oh, it's going to break to the upside. Why am I not in this? So it's coming back down. Momentum and trend are not working together. Momentum and trend are not working together. And we've got a little bit of a sideways price action. And there you go. Big monkey. We don't like it when those conditions throw a monkey wrench into our big, beautiful system, right? We ran this thing through ChatGPT for a month with data going back and forth. Oh my God, what a nightmare. But oh, so sweet now. My goodness. $6,000 to $8,000 a month in every competition that we've been in. Every competition. Believe it. Across 10 accounts, $60,000 to $80,000 a month. They take 10%. Go right ahead. Guys, if we can do this, your whole world is going to change. Your whole world is going to change. 60 to 80,000 a month. People will look at you like, come on. There's no way. Come on. No, I'm serious. No, you do this thing with the opening range breakout. What? You do what? What do you do? I don't know. They're not going to understand. But you will understand. So stick with those conditions. Make sure it's spectacular. And those are the trades that you work with. And here we go. We're going to be retesting that area again. I don't want to be a part of that. Retesting 3-4 times. No, thank you. I want a spectacular looking opening range. All my conditions met. Everything looks spectacular where I'm so excited and I just feel it in my bones. You've got all the conditions met for the breakout. That's the trades that you take. All right. So that's it for me, guys. That's the big lesson for today. I'll be watching this thing, but that's it for today. And we'll see what we get tomorrow. All righty. Great job, everybody. And I will see you guys tomorrow.